What CGC does. Canopy Growth operates two main segments: cannabis global production, distribution, and sale of cannabis products, and Storz Bickel vaporizers and accessories. The company has refocused on core cannabis and devices, reporting with these two segments beginning in FY2026. CGC's U.S. exposure is organized through Canopy USA, which holds U.S. THC assets including Wana edibles, Jetty extracts, 77% owned, and Acreage, 100% owned, with potential exposure to TerraSyn via units warrants held by Canopy USA LPs. Until U.S. exchange rules allow consolidation, Canopy Growth holds non-voting shares and has no economic or voting interest in these U.S. THC assets. Latest quarterly results: Q1 FY2026, quarter ended June 30, 2025, reported Aug 8, 2025. Net revenue, 72.134 M, up 9% YoY. Gross margin, 25%, down from 35% YoY, pressured by lower Storz Bickel sales, softer Poland sales, and mix shift toward manufactured adult use products. Operating loss from continuing operations, $23 M, a 21% improvement YoY on lower operating expenses. Adjusted EBITDA, $7, 916 M, wider YoY due to margin pressure despite SG&A reductions. Free cash flow, $11, 643 M, a 79% improvement versus prior year on lower SG&A, working capital, and timing of interest payments. Canada adult use cannabis net revenue, plus 43% YoY, helped by distribution expansion and demand for new products like Claiborne infused pre-rolls. Cannabis revenue overall, plus 24% YoY. Cost actions, $17 M of the planned $20 M annualized savings achieved since Mar 1, 2025. SG&A down 21% YoY in Q1. Outlook notes: supply chain improvements expected to support margin accretive European markets in H2 FY2026. A new Storz Bickel vaporizer is expected to launch in H2 calendar 2025. Business fundamentals to watch: Canada adult use share gains and product innovation sustaining top-line growth. International medical and European margins benefiting from supply chain improvements in H2 FY2026. Storz Bickel device cycle, new product in H2 calendar 2025, influencing consolidated margins. U.S. optionality via Canopy USA portfolio, Wana, Jetty, Acreage. TerraSyn exposure via LP holdings, with consolidation contingent on U.S. exchange permissibility. Currently no economic voting interest for Canopy Growth in those entities. Balance sheet and structure context: CGC deconsolidated Canopy USA as of April 30, 2024, and now treats it as a non-controlling interest. Any future consolidation depends on U.S. exchange rules permitting companies that consolidate U.S. THC operations. Canopy USA completed 100% acquisition of Acreage on Dec 9, 2024. Earlier deals included 77% of Jetty and 100% of Wana. Latest news and investor calendar: Q1 FY2026 results released Aug 8, 2025, with detailed segment reporting and savings progress. The company pre-announced its Q1 FY2026 release timing on July 25, 2025. Analyst targets and sentiment snapshots. Market Beat shows a consensus rating of sell based on two analysts over the past 12 months and indicates no active consensus price target listed, NA, as of Aug 11, 2025 on its page. TipRank shows an average price target of $3.49 with a high of $5.82 and a low of $1.16. Methodologies and coverage universes differ across aggregators, so figures may not align with MarketBeat's display. NASDAQ's Analyst Research Hub aggregates ratings targets but requires viewing on the platform. It lists data context as of August 8, 2025. Core cannabis momentum in Canada, plus 43% YoY adult use net revenue, helped lift overall revenue, but consolidated gross margins compressed due to mix and weaker device sales, leaving adjusted EBITDA negative. Cost control is gaining traction, SG&A down, savings achieved, improving operating loss and free cash flow trends. U.S. assets are organized under Canopy USA. CGC currently has no economic voting interest until exchange rules change, so consolidation and financial impact timing remain regulatory dependent. Public analyst targets vary by source, with one aggregator showing no active consensus target and another showing a $3.49 average. Overall sentiment skews cautious. Canopy Growth is showing top-line momentum in Canada and advancing cost cuts, but margins and profitability remain the swing factors, while U.S. upside is tied to Canopy USA and future regulatory permissibility.